Roger Ferguson, we got to get to him because he finally can't wait to cut rates. That's a lie. That, I thought I'd get someone's attention that way.
I would
Roger.
not have talked if I'd known Roger was.
Yeah, Roger.
I didn't know he was
former Fed vice chair as well as a CNBC contributor. If that ever does happen, Roger, you let us know and we'll cancel everything else we got going to put you on to say that. That's how surprising it was. So you did not say that. How are you feeling about the Fed's position right now?
I think the Fed is well positioned right now. I think they're not going to cut rates this meeting, next meeting. I'm not sure what's going to happen even beyond that, and we'll wait and see. So right now, I think they're in a wait-and-see mode. They're hoping for further disinflation, but they know they've got to be vigilant. And so I think they're going to signal a lot of vigilance this meeting and will be very patient before they cut rates, probably disappointing a few people.
Atlanta Fed, Roger, I know that, and Steve has talked about, you can't really bank it, right? Even though it's Federal Reserve Bank, but you can't bank on what they say. But why would you cut if you're, what are they, 3.8? You can't cut with, you can't cut with even if that's a remote possibility, you can't cut.
No, you absolutely cannot cut. And also you hear a lot of talk from Fed policymakers about inflation expectations, not just long-term, but short-term, maybe becoming a bit problematic. So I think they're very much on guard against signaling anything that suggests that they're rushing to cut.
And then you got the Straits of Hormuz, which are open right now. But that's definitely got to be on everyone's radar screen as well, I would think. We hope for the best, but prepare for the worst.
No, I think that's right. And you know, Steve has had a great conversation about the impact of oil prices on headline. It does not appear recently to spill over into core, but as Steve kept saying, that means policy's got to be well positioned to make sure that that doesn't happen. So I think everything points to a Fed that's going to be very, very cautious this year.
Do you think that we ever get to a good rate cut? And you know what I mean by that? That's what we're using now, shorthand for a rate cut that happens because inflation is not quite as big a problem as we had thought, as opposed to weakness in the labor market or a slowing economy. It'd be amazing to get a good rate cut down the road. I think
we'd all like to get one. They came awfully close to achieving the elusive soft landing. I think this year it's going to be hard to get to, quote, a good rate cut because I think there's still too much risk for them. Perhaps next year things will feel much better and we'll have greater clarity around both the tariffs, the oil impact, whether or not immigration reform and deporting people has had a big impact in labor markets. So I think this year there's too much uncertainty. Hopefully next year, greater clarity and disinflation will continue and they'll feel that they can come off just a little bit. But even there, I don't expect dramatic moves anytime soon.
Roger, what about the president's idea that, hey, inflation's low now, you can cut, and if you're wrong and you have inflation later, you can hike later? What's wrong with that idea?
A couple of things wrong with it. One is we had one good inflation reading middle part of this year. The same thing happened last year, Steve, you may recall. A couple of bad inflation readings at the beginning of the year, good inflation readings in the middle of the year, followed by bad inflation readings. So firstly, I wouldn't put too much weight on the most recent very good news. Hope it continues, but the pattern has not been favorable. Secondly, there's the inflation expectation story that they have to worry about. And third, they were late to the last bout of inflation. They don't want to be caught flat-footed again this time.